Alright, thank you for tuning in to another edition of the Vulcan Report. Right now we're looking at the securities that are in play for September the 8th, which is Wednesday. Alright, the never ever changing spreadsheet is upon you. There are plenty of securities that we're looking at as far as opportunities to trade today. Be careful of gap ups and gap downs on the open. One word of caution: when the market gaps up or gaps down on you, there's not a whole lot you can do. Just go ahead and let the market do what it's going to do and just leave it alone. It just wasn't time to get in there yet. Alright, so I want to encourage you with that. Also, in addition, I want to point out a few other things. There's a lot of information on this spreadsheet, and you really want to become equipped to utilize all of the golden nuggets that are contained therein. Right now the markets are in a state of transition, meaning that in the stock market we're in a situation where we could really take off like a rocket, and it looks like there's been a lot of operating in the market to lift it higher. In addition to that, there's also signs of operation. Even though gold is continuing to hit new highs, I'm getting positive bot checks coming back to the downside. So we're going to have to trade what we see, but be careful of very quick and powerful reversals that could happen in gold. For whatever reason, they're allowing it to rally, but doing so under a controlled situation. Also, it looks like we may be losing control in the heavily manipulated bond market, getting positive bot checks also in the bond market, so watch your treasuries. It's very difficult, as I've mentioned in prior videos, to make money doing anything against the trend in bonds, only because the ETFs those mechanisms seem to be out of synchronicity. So it's going to make it very difficult to get a handle on the activity in the bond market, because you're actually trading against the Fed in that situation. So I guess the old saying goes, don't fight the Fed. At any rate, looking at the spreadsheet for those of you who are new to the in-play spreadsheet, the first two columns here, these rows here, the PWRES and the PWSUP. The PWRES is the pulse wave resistance. That is where you're going to buy at with the stop limit order. The pulse wave support is the price where you're going to sell the security short, or use that as a stop loss if you're going to be buying the security. Likewise, the pulse wave resistance will be used as a stop loss if you're selling short the security, entering on a stop limit order under the pulse wave support. The next column is your pulse wave positive momentum. When you're buying a security, it's good to know that there is positive momentum in that particular market. Likewise, this is the pulse wave negative momentum, the next column here. Okay, so when you see a check mark in both columns, it means you have a pretty decent pulse wave opportunity in front of you, and we don't know which way the market wants to break out, either long or short, so you place both tickets. The next column here is a positive swing VIX. A positive swing VIX means that sentiment has reached a certain point in which the security is ready to reverse its current trend or position. So if it's been trending upward, it's ready for a pullback. Likewise, a negative swing VIX means that sentiment now has run its course to the upside, and the market wants to reverse to the downside or retrace. So positive swing VIX is a retracement to the upside. Negative swing VIX is a retracement to the downside. You can pretty much set your clock by these two indicators. The next column is trend. A 1 means that it's a positive bullish uptrend. A 0 means it is a negative bearish downtrend. The next column is market depth. Market depth simply means that the fundamentals are either in line with the trend or they're moving counter to the trend. A 1 means that the fundamentals are bullish. And a 0 means that the fundamentals are bearish. In situations where you have a bullish trend here and a bearish market depth or fundamental, means that the fundamentals are not in line with the technicals. And that could mean one of two things. Either the trend, the bull trend, is not a strong trend, and that it's likely to come into alignment with the negative fundamentals and turn bearish, or the bearish fundamentals are about to turn and become bullish and trade with the trend. So these two go hand in hand. The next column is what we call the PPT high frequency trading bot. This means that we're getting positive order flow or price action in the security that's being picked up by the algorithm that will not be picked up under other traditional means or volume or technical analysis. The reason why volume is a lying indicator, and it has been now for several years, is because volume has the ability to be manipulated. As you know, markets can rally on light volume, they can crash on light volume. Likewise, they can rally on strong volume and rally on weak volume. In addition to that, order flow can be manipulated through dark pools and things of that nature. So it does not give you a true feeling of price action. So that's why I created the what I call the PPT high frequency trading bot. Okay, and this trading bot, this algorithm is pretty intense because it looks at what the market depth indicator does not. It takes a look at not just raw fundamental data, but it looks at the price action and the order flow. It looks at the how many people are long or short in the options. It looks at the bid and the ask spreads. It looks at volume within that. I mean, it looks at a lot of different things regarding price action. Likewise, the negative PPT high frequency trading bot picks up negative price action order flow that's not picked up in volume analysis. So 98% of the time, if you get a negative if you get a negative bot check, it means that there is some secret underlining sell orders being thrown into the market, and there's a 98% chance that the market is going to reverse course to the downside shortly. Likewise, a positive bot check means that prices are being, this particular security is being accumulated secretly, and prices should be being pushed and forced upward in the near future. So there's a 2% chance where if you get a positive bot check back, that you can get prices moving in the opposite direction. Likewise with a negative bot check. That's why you really have to watch it on these on the bot checks. But your bot checks, positive and negative, and your swing VIX, positive and negative, are two of the most important secondary indicators, or how can I say this, entry points that you have. They're secondary signals. They're not primary signals. Your primary signals is your positive and negative post-wave momentum. That's primarily what we trade off of. Is the post waves right here. Okay, those are your primary signals. So you're watching for, a check here. Okay, and then secondary, if you don't have a pulse wave reading for the day, you're looking at your negative and positive swing VIX and your positive and negative bot checks. Okay, now here's how you decipher the information. Let's take, for example, Citigroup. Okay, Citigroup you see here you have a pulse wave reading, all right, positive and negative. So in the before the trading day begins, you can go ahead and place your ticket. You want to buy at $3.98 on the stop limit. You also want to sell short at $3.63 on the stop limit. Okay? Whatever one gets filled, you use the other price as your stop loss to trail your position. Okay? Likewise, you look over here. Sometimes you'll get a swing VIX reading or a positive or negative bot check. In this case, you have a negative swing VIX. And being that you have a negative swing VIX, there's a high probability that this pulse wave will be triggered, especially on a reversal to the downside. Now, it already shows you that this is in a bear market, hence the zero. Negative market depth, that means negative fundamentals. The technicals and fundamentals are actually in alignment, but you don't have any positive and negative bot checks. Okay? Again, pulse wave is your main signal, so you want to trade with this first. All right. Now let's scroll down to a security that does not have a positive or negative momentum pulse wave situation. Let's go to the TLT, the U.S. bonds, hot market. All right, we don't have any pulse wave readings for the day, so you know that you're not going to be looking for any pulse wave potential breakouts. So it's on the list though, which means that this security is in play today. What we have here, a positive swing VIX reading. Okay, remember, positive and negative swing VIX, positive and negative bot checks are your secondary signals. Okay, so what you want to do here is you want to come over here. This is a positive swing VIX. Come over here to your RES high and your SUP low, your resistance high and support low. These are your secondary entry points. Okay, when you don't have a pulse wave trade for the day, you're looking at your secondary entry points. Where can you possibly get in to make money? Okay, in this situation, on the bonds, you're going to want to place a trade to buy at 105.82 on a stop limit. If filled, put your stop loss at 104.76. Just that simple. All right, and because these are secondary signals, you might be able to hold this one for a day or two to squeeze out some profit, but the majority of the time, secondary signals, or for lack of a better word, day trade signals. Okay, your pulse wave is your swing trade signals, because you can hold pulse waves for several days sometimes, and on your secondary signals, those are primarily day trade signals or situations, which means that you're looking to get flat and take profit by the end of the day. So you're just basically taking whatever the market gives you that day. I'm not saying that you can't hold those overnight or hold them for a couple of days and eke out extra profits. I'm just saying that the majority of the time they're secondary signals. So basically, there's something for you to trade every day. There's a possibility in here to make money every day, is what it boils down to. Okay. So that's pretty much it. Is how you're reading this, so you can get used to it, learn to trade it for all it's worth. Okay. Now let's look at some securities like the SP 500, the ticker symbol SPY, the spider. All right, we have a negative swing VIX reading. So what you're going to be looking to do on Wednesday is you're going to have to come over here and look at this 109.50 reading, because chances are the market may pull back a little bit further, and there may be a couple of pennies on the table. For equities, you're generally, I'm being honest, you're looking for anywhere from 25 to 50 cents on an intraday basis. So it's not necessarily a lot of money on the table. Sometimes we can break out and the market can gain momentum on you and pay you a lot. But I mean, generally, because it's an intraday trade, you're lucky if you can make a buck. But generally, you're looking at anywhere from 25 to 50 cents on average. Okay, so you trade as many shares as you can afford to lose, and that's why the stops are usually tight too. If you can see, these stops are pretty tight, because basically you're saying if the market's going to move, and it's gonna